Hey guys, welcome back to Sky Talks Trading. My name is Sky and I am on a quest to invest, and today's video is all about Nio Stock. This is one that I don't talk about much, but I don't know why, because I am a big fan of it. So let's get straight into it. You know, I'm not a financial advisor. This is just my opinions only. So I actually want to start off by talking about an aspect when it comes to Nio that I think makes it very cutting edge. And, you know, it has an edge over its competitors, and that is its battery as a service, BaaS. It kind of has this doubler effect. The more electric vehicles that Nio sells and subscribed to battery as a service, the more revenue it will generate post-sales. So they don't just get the revenue from that one-time sale, but it's kind of this recurring profit. And since Nio EV has no aging battery, BaaS gives Nio a revenue stream way after each EV is sold. And then since this battery swap is fully automated, there's no expenses to cut into that profit. So in that way, it's a doubler, maybe tripler revenue driver. So I think in that way, just measuring Nio by the amount of vehicles that it sells isn't really doing it justice. So it's got this big profit formula. You've got the electric vehicle plus the battery as a service, plus the ADAS, the ET7 and newer, and then plus the other bets like Life, mobile charging, partnerships with Lotus, used car, etc. And then when you think about rental fleets, they will demand battery swap to control costs and time. Tesla and Lucid fail to deliver this critical EV engineering technology. But yeah, when it comes to production, Nio will double production at the Hefei facility to 240,000 vehicles a year after a complete overhaul, which is expected to be completed in the first half of next year. And the Hefei facility can make sedan and sport utility vehicle models. The plant would be able to make up to 300,000 cars a year after all the upgrades and extra shifts. You know, I really think that Nio's future is starting to finally be recognized by the market. The earnings have been moved up to November 9th, so that's good news. The volume is above average. Deliveries are down, but orders are up and capacity is growing. You know, and don't forget, they only sell EVs now. Next quarter, the best premium level 4 EV sedan hits the market, and pre-orders are through the roof. Also, let's not forget they're building the largest EV production plant in the world, Nio Park. So the marathon is just beginning. So let's break it down, shall we? If demand matches supply next year, which is very likely, then there is a high chance of 300,000 plus deliveries by the end of next year. Why? Basing it on the expected production capacity increase next year and unofficial plant production in Europe. This is hinted by Lee himself. And the yet unfinished Nio Park, which will start production Q4 2022. All might provide a surprise in actual production capacity for the whole of 2022. This figure that took Tesla over 15 years to reach, granted they had to, pioneer the tech, they were like the first movers, if you will, would have only taken Nio half that time. At this point, Nio will be profitable and have a further source of revenue from its sub-brand, which has not yet been revealed. All this is achieved, Nio share price would absolutely skyrocket from a base of $50 through mid-2022 and 2023, reaching a valuation much higher than what will be predicted by investment firms. You know, Nio could reach $1 trillion valuation by 2026 at the latest. So that would be a share price of $600, at that rate. So let's have a little look at what the price action has been doing. Nio gained 1.13% during Tuesday's trading sessions. Nio's monthly orders rose again to outpace its rivals. It's definitely had a strong start to November. They closed the trading session on Tuesday at $41.30. The closing price actually represents the highest the stock has finished a session since early August. The main focus on Monday was surrounding Nio's massive drop-off in vehicle deliveries for the month of October. While the company was able to ease shareholder concerns with the explanation that the drop-off was due to upgrading manufacturing facilities, it was still another knock against Nio, which has been struggling during the global chip shortage. But on Tuesday, investors were much more focused on the company's vehicle orders, which rose to hit a new all-time high once again. So yeah, like I said, Nio releases its third quarter earnings on November 9th. After market close, Nio is expected to report strong numbers, with analysis projecting lower losses on more than twofold growth in revenue. Nio last projected its Q3 sales to be up between 88.4% and 104.8%, and revenue to grow between 96.9% and 112.8% year over year. So, keep those numbers in mind and mark your calendars for November 9th. It'll definitely be a crucial day for Nio investors. I think Nio is one of the hottest EV stocks to own for the next decade, to be honest. So, just want to talk about a few other little news stories. IPOs, there's a lot of them coming up. There's a slew of initial public offerings in the upcoming week. So that's, going to keep investors busy, especially investors who are interested in IPOs. An estimated $2.7 billion will be raised across 13 IPOs listing during this week. Companies to be listed include eco-friendly shoemaker Allbirds, and their ticker will be BIRD. And then there's the personal finance website NerdWallet, which will be NRDS symbol. A couple of these companies could receive unicorn valuations of $1 billion. Equity markets on Tuesday were mixed as positive earnings reports were offset by speculation of interest rate hikes from the US Federal Reserve. And I also want to talk about Alibaba, because shares are falling. The question is, why? Alibaba shares are trading lower amid weakness in Chinese stocks, mainly due to concerns in the real estate sector. So they were trading low throughout September and October amid continued China-based real estate company Evergrande uncertainty, which has weighed on the broader Chinese market. Investors continue to weigh the possible default of Evergrande. The gaming, education, and technology sectors have also been under regulatory pressure in China this year, which has also driven volatility in the overall Chinese market. Alibaba has a 52-week high of $311.44 and a 52-week low of $138.43. So, if you're missed your chance to get into BaaS, it could be a good time now when they're taking a bit of a dip. So guys, that is all for today. Thank you so much for listening, and I hope you have a great day.